I welcome all my dear friends, my name is Evgeny and you are on my YouTube channel. And since I have received a large number of requests to analyze this stock, meet the analysis of the company Vale. Well, I wish everyone a pleasant viewing experience and a good appetite to those who eat. And we begin. Vale is a Brazilian mining company, one of the largest in the world. It is the world's leading iron ore and nickel miner. Its main production facilities are in Brazil, but it also operates in Canada, Mozambique, Indonesia, Malawi, and Oman. Founded in 1942, capitalization of the company is about $56 billion. Pretty impressive. The business operates in three main areas: ferrous metal, non-ferrous metal, and coal. In the direction of ferrous metal, iron ore is produced and iron ore pellets as a raw material in steel making. At the end of 2023 brings the company about 80% of revenues, which is a very significant part of total revenue. I cannot say that this is a positive moment because such a large dependence on the one product of the company is too risky. In the direction of non-ferrous metal, the company is engaged in mining nickel and byproducts of production like copper, gold, silver, cobalt, but they account for a very small share. Also offers platinum group metals. It brings the company about 18% of revenues. And the last is coal. The extraction of metallurgical and steam coal brings the company literally 1% of revenues. In general, many analysts and investors talking about the prospects of this business point to the production of nickel, which is an important component of batteries for fully electric and hybrid cars. Nickel increases the capacity and allows the car to increase the mileage without recharging. And as we all know, the world is planning a smooth transition to electric cars, and analysts statement that this will lead to increased demand for nickel over the next 5 or 10 years. Vale said that in its coming years it will increase nickel production. It's kind of great, but nickel only adds 12.5% to the company's revenues. Of course, this doesn't negative the fact that is certainly a very positive development and may increase the company's nickel revenues in the next few years. But still, it's not so cool as some analysis tried, because even if we imagine that the company will increase nickel production and nickel prices will grow, and let's say the nickel direction will bring twice as much in 7 or 8 years, it will increase total revenues by 12.5%, and in annual terms it will be about 2% growth in total revenues, which is not bad, but also not a rocket like many like to say. But why did the company shares fall? And not just fell, they simply collapsed by more than 50%. It could not just happen, and there are several very important reasons. First, a general correction in the Brazilian stock market. The iShares MSCI Brazil ETF, which tracks 55 of Brazil's most liquid large and mid-cap companies, fell 32% between June and October. Also, inflation in the Brazil is very high and has exceeded the level of 10.5%, which also scares many investors. And a more serious reason is the drop in iron ore prices, which, as we all remember, brings the company the most of the income, respectively, as we see after the huge increase in prices in 2020 year. This increase was because production started to recover after the lockdown, but now the situation is back to normal, and so we have seen a sharp decline in the iron ore prices. There is also a problem with demand from China, which slows down GPD growth and construction growth. Everyone knows about the problems of Evergrande, one of the biggest builders in China. Now, so demand for iron ore is in a rather unobvious position. It is quite difficult to predict what the prices will be. Of course, prices are unlikely to stay at these low levels for a long time, and in the next few months will be to increase the prices of iron ore to levels of $90 or $100. Accordingly, if 80% of incomes are on iron ore, we can draw a conclusion such strong falling of the prices, even taking into account that they will grow a little bit, will strongly strike on incomes of the company. Third very important nuance that scares away a very large number of investors: Vale's activities in the last 5 years have led to two man-made disasters. In 2019, a dam failure killed more than 250 people. In 2015, the bridge led to the largest environmental disaster in Brazilian history and killed 19 people. An inspection in April 2019 found that 24 of Vale's dams in Brazil are not technically fully stable. There are 2 points here. The first is the human one, in terms of the company being responsible for the deaths of a huge number of people and the huge environmental damage. Yes, you can say that smoking also kills and much more, but we are investing in it. Yes, absolutely, but you see the problem is smokers kill themselves of their own free will, and here people died because of the company, so of course everyone's attitude may be different, but this is a serious disadvantages when investing in the company. And the second point is economic. The company receives huge multi-billion-dollar fines, which it will have to pay for the damage incurred in the regions, which of course does not help the company's businesses. In fact, unfortunately, there are no guarantees that they will not happen again in the future, because in Brazil there is no strong regulatory framework and strong regulatory agencies such as in USA or in European countries. So it is a black swan may become another accident in the future, and you should be prepared for it. Well, enough about businesses, let's talk all the same about the financial performance of the company. Let's start as always with the dynamics of income. Here is immediately striking the lack of stable growth in revenues and net income, but since this is a mining company, all fairly clear. If we impose on this chart iron ore prices just the same and see the correlation. When iron ore prices were low, the company showed very bad results. For example, in 2009, in 2010 and 2011 iron ore prices were quite good and income went up. When in the 15 and 16 year iron ore prices had fallen down again, the revenues had followed the ore prices, and the great profits that the company showed during the last quarters, due to which it had such a great indices of value were connected with the increase in the price of iron ore. Accordingly, now the prices have fallen again very strongly, which makes us quite simply understand that no growth in revenue at the ore prices should no weight. Of course, as I said earlier, it is unlikely that such low levels of prices will remain, but you should not expect anything extraordinary from the ore prices. Free cash flow feels the same way like revenue and income. Further, let's look at the balance sheet of the company. Here we see a favorable situation, growing both assets and liabilities, but assets growing much faster. As a result, we obtain growth in net equity capital of the company. Namely, for 4 years it has grown by almost 30%, which was such a big business is actually quite good. Credit indebtedness of business is not very big, namely 61%, which is acceptable level. Also, the company has a decent amount of cash on the account. Also, the company has a very good indicator of interest coverage or debit cover. But here it is worth mentioning that is so good as long as the company has such higher revenues, respectively if revenues fall, respectively, and the indicators of interest coverage will be lower. But even despite the decline in this indicator, in principle the company has no problems with debits. As for the net margin, it is now just great at 31%, but again, we all know that it is exclusively due to the huge increases in the iron ore prices, which was in 2020 and 2021. So in the future we should not expect such high net margins for the company. So finally we come to the value indicators. This is probably the best thing in the company. Value indicators are amazing. Price to earning of the company is 3.5. Price to book value is 1.7. Price to sales a little over 1. Price index. Price to free cash flow 2.5. In general, all indicators of the cost are in remarkable values, but in this case, unfortunately, we cannot use this level. For business estimation, we should take Schiller's PE ratio. Who doesn't know how it works? It works approximately in such a way. To calculate the multiplier of PE of Schiller, we should divide the price of the company by its average annual profit for the last 10 years. This is different from the usual PE ratio, which only takes into account the profits of the last year, and here it is already equal to about 20. But here we should also take into account that it was quite a difficult period for the company in 2015-2016, and while such low iron ore prices are still not expected, so our value of P ratio is about 8 or 10, and this figure is worth starting from. But even despite all this, the company is still undervalued. Of course, if it happens the iron ore prices rise again and grow very strongly, of course the company will continue to have a very low value indicators. But so far the prospects for iron ore is quite ambiguous, because China is in an energy crisis and growth rate of both China and the world economy is slowing down. Real estate construction is slowing down as well, so it's not clear yet. And of course, nobody will forgive me if I didn't mention the enormous dividends that the company pays. Of course, the dividends recently give a staggering yield of more than 20%, and the company has a very low cost index for these very dividends, and specifically the company spends only 55% of profit on such a huge dividend, which is very safe. But here is one thing, but the company pays dividend depending on its income and business condition, so no talk about stable dividends here cannot go. Yes, they're big, but the company may or may not pay them. As we can see, it was a one-time record payment, and whether it will happen again, it's unclear. And the last thing I would like to consider is the situation with the buyback. Basically, I cannot say that there is a trend to redeem the shares from the free float, but still, for the sake of justice, it is worth mentioning that from 2008 to 2021, the number of shares declined slightly. Well, and it is time to sum up what I can say about the company. It is certainly worth nothing, it's very strong, net equity capital is growing, good indicators of value, in principle not strong debit burden, businesses, but unfortunately for me, personally, I still have more disadvantages. Uncertainty in the iron ore market to low diversification of income of the company. That is 80% depends on one asset. Well, you agree, it is not safe. Also, in certainly a certain imprint on my decision has left a disaster the company. Honestly, start this analysis, I was sure that this company has such low indicators of value is simply doomed to success, but now I do not look so positive at the situation. Certainly the company is undervalued and it's likely to rebound 20 or 30% on any positive news about rising ore prices. But I would not talk about any great long-term prospects. If you want to receive large dividends and invest in raw materials, I would suggest you look at Russian's assets, and I can only give this company a score of 5 out of 10. Of course, if there is a sharp increase in the price of iron ore, the stock will take off and feel just fine. But so far, I do not see any clear arguments for rising prices of ore. If you think that there are clear signals that iron ore will rise, then of course you can write about it in comments. I will be happy to communicate and discuss the topic. Thank you very much for watching, friends. I was with you, Evgeny. Until next time, friends. До новых встреч, друзья. Arrivederci.